Hi, hello everyone. I have a lot of questions to me due to the very volatile financial markets. And there are seven tough questions from individual investor posed to me, which is to deal with the financial hard facts of life. Now let me go through one by one. The first question is, everything looks quite bad and all asset class have quite a bad negative performance, both the listed equity, bonds, and even real estate. So, what an individual investor can buy at this moment for their spare cash, and what is the application of total asset return in this kind of bearish sentiment? My answer is there are two sides of the equation. One is the asset size that we always talk about. So what to buy? Okay, you can buy short-term bonds, although the interest rate is going up. You have to set up your mid and long-term investment plan on index fund. And also, you can buy some selective fixed income product, such as the money market funds for parking cash. And also, a lot of people ignore that another side of asset is the liabilities. If you don't have any investment conviction at this moment, you can reduce your liability, such as paying back partially or fully the mortgage amount, especially if the mortgage rate is expected to go up anyway and will make personal affordability worsening. So also, seldom people will talk about is think about paying full your life insurance policy. One-time payment, that's for all. So talk to your agent. So when one review the total portfolio, means asset and liability, you will find out more things you can do, especially if you don't have any investment conviction at this moment. The second question is about asset allocations. So people heard a lot about people switch from US equity to Asia, or some quit the equity, go to gold. So what is the ideal asset allocation for an individual aiming to generate sustainable returns in the mid and long term? And what exactly is an inflation hedge assets? Our response is, for institutional investor, they have no choice. They have to keep investing no matter how bad the market situation is. So for example, 100% equity mandate means you have to invest in equity anyway. So now it's so obvious US equity on the overall valuation perspective is more expensive than the bomb now Asia, especially China, Hong Kong. So if you like Warren Buffett, very fundamental style, which performed extremely well recently when you look back the mid-long term, so they have some cash to prepare to buy into sharp weaknesses. They have also a lot of cash in their funds. So equivalent to individual, you should have some cash and for deployment if there are any sharp weaknesses in the market. And for the commodity, of course, it's already quite a good run up. I don't think we should be too overweight, so that people would tend to take a neutral stance, underweight equity, and have some cash, just waiting for good opportunities coming up. For individual, what is a real inflation hedge asset? Of course, is the real estate and listed equity in the long run. Let's look at the question number 3, because people say they are quite confusing about stop loss and lock-in profit and how to interchangeable using these two terms or in practice, and how it works for individual investor. I can say yes, stop loss means you lock in some loss, and then you switch it out to cash or to other securities that will provide relative better returns, at least from a relative point of view. Lock-in profit means you have profit, you lock it in, and also you switch to cash or switch to other securities, which can provide better returns. So the key things is the realized or unrealized profit and loss, which can offset each other. So before you implement the plan, you should judge what is a good opportunity for you. Either you don't have any conviction, then you switch to cash for a while, or in a relative sense, you still have high conviction on something, then you can put the cash into action by buying on weaknesses into something that provide you a better, at least relative prospect in the coming future. So that is the term. So it would of course depends on your absolute loss absorption capability and your assessment on the new portfolio prospect. Yeah. The fourth question is, what is the risk of investing in thematic ETF? If they keep the thematic ETF, a lot of the new economy ETF so far we have touched on in the past video have been suffer quite a lot. And also, so how about fixed income ETF? So what I can say is many fund management company tend to close the non-performing funds, especially for those thematic ETF that have suffered huge losses. I mean 60-70%. One is due to the declining asset size, means lesser return, and also very expensive cost because of the shrinking rapidly the asset size, and also give them a very bad track records. And this bad track record will potentially negatively affect the future selling power of new types of funds. The risk for the investor in this kind of fund is when the fund is closed, then your loss is locked in forever in the fund. So that's not good, of course, yeah. But that's the risk on thematic ETF instead of investing in an index, country index, for example. Yeah. So now, at this moment of time, fixed income ETF is also suffering, although the bonds that hold by the fixed income ETF will not necessarily be default their payment, but they will experience capital loss because of the mark-to-market price difference with the original purchase cost. So that's the risk. So if you want the cash back, then you will suffer the mark-to-market loss. That's the risk. So seems not so good, yeah. So the fifth question is, a lot of people talk about cryptocurrency. So it's difficult to project the prospect, but what we can get is the limitation. What we can think of, any limitation to the prospect of cryptocurrency at the moment. A decentralized financing trend, actually think about, is quite fashionable, but now it go against the current deglobalization trend. Think about it, deglobalization. Okay? Because B, major countries intend to launch their own digital currencies, like China. So it may make the cryptocurrency development a bit sluggish. C, different countries may have different financial regulations, so it hampers the decentralization or common platform in a short period of time. because of different regulations, and it's tax related or fund movement related. So it will cause some hiccup, in the imminent future. D. The industry is still subject to fraud, hacking, and self-imposed quantity limitations, the risk that we have just mentioned about. But we see long-term prospect for the cryptocurrency as an alternative asset class in the long run. So we will see more interest coming back, buying on sharp weakness for the cryptocurrencies. The sixth question, very common. What is the biggest risk ahead for global financial markets? Obviously, I have mentioned the deglobalization trend is set, and the disintegration or reorganization of global trade order will extend to manufacturing, food, energy distribution, trading, whatever, even any single country's reserve currency diversification. This is quite a deep implication and will be quite long-term impact. And if we see any extended global military conflicts, the picture will be even more complicated. So we should expect wild financial market volatilities, as we mentioned in our April outlook. Polarization of investment return on different sector country instruments will continue. Seven questions for someone. One of my good friends, they say, really, I don't know what to do, how to invest. It's so confusing, the picture. And I know very little about equities or fixed income. I just know they are keep dropping, declining the market price. So what can I do if I have some money to invest? What investment that can be long-term and can even pass on without any worry to my children or relatives? We should find financial instrument that fulfilling the following conditions in the long run. Is inflation hedge, no single company risks, as anything can happen to a company management, and can pass on to next generation without much worries. Some cash and dividend income from time to time. The management of the investment should be cheap on an annual basis and do not need intensive and deep investment skills. So as we have mentioned about a bit, we think buying index funds, ETFs, seems to be best fit investment vehicle because it's cheaper, do not need intensive and deep investment skill, cash dividend from time to time, and you can pass it on to next generation. Company can disappear through merger, acquisition, anything's happen, but countries, except for the developed or promising developing countries, the country stock market index will still be there, and only the strong will survive in the index universe. As we can see also from a return perspective, in the past decades, we can see the developed market equity index can deliver double-digit return, 10-11%. And even 3-5 years, you just use any global hedge fund index for the sophisticated institutional investor. When you compare with the return of MSCI World Equity Index, you can see actually it's much more easy for everyone to comprehend I buy a world equity index ETF that give me 30% return, 46% within 5 years. And instead of buying something that not many people know what exactly a hedge fund or a barrel of hedge funds are doing. So we have mentioned that in our interview with Dr. Garfield Mill. So if you remember that he said he just using a lot of ETF to construct his portfolio. He's happy with 7 to 8% annual return, and 4 to 5% can fight some inflation. And actually, you can see from the MSCI public website, annualized return around double digit for the World Equity Index is achievable. So that is the meaning of sustainable long-term investment for people really do not have much idea of the complex world, what is happening. There's another way. So please refer back to the previous training section. I have write down the link, and there are lots of things inside, and so far we are quite correct about the market and how to approach in this chaotic time. Please take some time to study and formulate your own investment plan. Feel free to write to us, and you can get to our company website to get all the link. Thank you and good luck in the investment journey.